Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that answers all your stock-related queries. In case you're here for the first time, then you could log on to our YouTube channel, Business Today. Go on to Daily Calls Live. Send us your questions in the comments section. Alternatively, you can also dial in and mention your questions on this WhatsApp number that's flashing on your screens. Don't forget to mention your own name, location and your contact details so that we can also give you a chance to speak directly to our top market experts and take a custom-made advice for yourself. Now, whether it's about holding the stocks that you're having, what should your strategy be on the existing portfolio, if there are fresh stocks that are coming onto your mind, anything and everything regarding stocks can be put together. As far as this show is concerned, two top market experts will be joining in to help you decipher the best strategies on your stock portfolio so that you can continue to make profitable returns on all of the stocks that you are holding on. Let's quickly look at how the markets are first shaping up in trade. Much better off than what we started off the day with. It was a very slow start, a very volatile start and a narrow band start for the markets. But they started to pick up pace after the first hour of trade, and you have actually seen the markets now soar to nearly 24,900 odd levels, 0.7% higher. We are hovering near the high point of the day. It's the IT stocks that have pulled up the lever. Now you can see it's the top moving sector with over 1% gains that are coming in, and therefore you can actually see a whole host of those stocks contributing strongly to the Nifty's gains. I will mention the top contributors there, but let me just tell you first about the sectoral picture. Barring PSU banks, rest all of the sectors are now in the green. Small caps from the broader markets toggling between the highs and the lows below the flat line at this point in time. But IT, infrastructure, financial services, even the banking space that was so far a laggard in the morning trade has largely pulled up. Now you can see it's the Nifty Financial Services Index that's pulled up pace. Private banks are also 0.5% higher. That's also doing well. On the Nifty, you have life insurance names today that are doing very well. SBI Life, HDFC Life, top two movers on trade. You can see ONGC, Cipla, Trent. These are the other names that are doing very well in trade. On the downside, Tata Motors. We addressed this one in the morning as well. There is a decline of about 4% there. Dr. Reddy's, Adani Ports, Sun Pharma, State Bank of India. These are all the stocks that are declining in trade at this point in time. As far as the Nifty is concerned, we will also be now welcoming our guest on board soon. Nilesh Jain will be joining in. He's the head of Vice President of Technicals and Derivatives at Equity Research of Centrum. Warm welcome to you, Nilesh. Good to have you with us on the program. Well, the market picked up pretty well after the first initial hour of trade. What do you think are the key factors? 600 point of a run up on the Sensex, and even the Nifty is back at 24,900.
Very good afternoon, Sakshi. Well, on Friday we saw a big crack, and soon after that we have seen a gradual recovery. Due to that, the markets, the Nifty in fact managed to end about 24,700 mark. So that recovery has given a good hope, and the closing on Friday was pretty better compared to what we saw initially, with a big gap down opening. So back to back on Thursday and Friday, we have seen some bit of selling pressure. Now today we are witnessing a relief rally. Given the kind of data we are getting from the derivative front, where we have seen a short covering from 24,700 to 24,800 strike. In fact, 25,000 strike is also witnessing a bit of unwinding of the position. So that is sort of a positive sign for the markets. The put writers have started building their position at 24,600, 24,800 strike. So today we have seen multiple development. Number one, the VIX have cooled off from the highs. It is trading at 14.70, a 2.5% decline. A further drop from here will provide more comfort to the bulls. Number two, the Nifty reclaim is 21-day short-term moving average, which was placed at 24,835, will now act as immediate support from here, and we can expect a move towards 25,000 as well in the Nifty. So the setup looks positive. Today we have seen a good rebound. Nifty managed to fill the gap that we saw on Friday. That is again a supportive sign for the markets. The Bank Nifty has also started witnessing a catch-up move today, and it is trading well above 55,500 mark. So given the overall setup across all indices, the sentiment looks positive for a follow-up move to continue. Although it's very difficult to say we are out of the woods, but as of now, we are witnessing a relief rally that is likely to extend further from here.
Okay, got that. I hope this has really given a lot of idea to our viewers as to how should you be really viewing the market and the outlook going forward. Nilesh, we have a lot of questions coming in from our viewers, so we'll start looking at that as well. Let's take the first one. This one is from one of our viewers, Somalia Biswas. He's from Kolkata and he says he has 800 shares of Sagility India at the rate of 38.76. Now he wants to know a stop loss and a short term target of this stock if you could provide to him. I know limited data, but what exactly would you be suggesting here?
Sakshi, you're talking about Sagility, which is trading at 38 rupees, right?
That's right.
Right. So, if you see this particular stock, as you have rightly pointed out, we have limited data because the recent listing got listed in the month of November 24. So, less than approx 7-8 months data. But looking at the structure, it is more sort of a volatile counter. We have seen a lot of upper and lower circuits in last 6 to 8 months. So, it's very difficult to trade in this kind of extremely volatile counter. But if already bought it, then keep a strict stop loss at 37 rupees because a break below 37 will drag this stock further towards 34 to 32 as well. So first of all, keep a stop loss at 37. And if at all you see any pullback towards 41, 42, that can be a good opportunity to exit from the long position, given the kind of history this particular counter has, a lot of upper and lower circuits. So better to avoid trading in such kind of stocks. You have better options available. So any pullback from here could be used as an exit opportunity.
Okay, got that. I hope, Shamalia, this has helped you out in devising your strategy on the stock going forward. Next, we will take a stock query. This one is from Mahi. He says, hi Sakshi, is it the right time to enter Time Technoplast? How would you look at Time Technoplast? If we look at the stock also and see what the current price is of the stock, we'll be able to find out on the charts 434, a percent lower in trade today. And you can actually see in the last 1 month, the stock has actually given 21% of returns. So stock has been in momentum. Can one still enter this one, Nilesh?
See, Time Techno structure looks positive. If you see on the monthly scale, this particular counter has been in a very strong uptrend. Although in last couple of months now we have seen some bit of consolidation, but the structure looks positive. Can be added on declines and can be accumulated at lower levels. From positional perspective, the stock has a potential to test 500 plus kind of levels on the upside. And from a trading perspective as well, if you see any dip towards 420, that can be used as a buying opportunity. 380 is a very strong support, that should be the stop loss, and structure looks positive of 500 plus kind of levels from a short to medium term perspective.
ठीक है, चलिए यहाँ पर भी आपको राय मिल गई है. नेक्स्ट वील टेक अनदर क्वेश्चन. दिस वन इज फ्रॉम वन ऑफ आवर व्यूअर्स, अभिषेक चैटर्जी. ही इज ऑल्सो रिटन ऑन आवर व्हाट्सएप and this one is, he's from Kolkata. He says, I want to ask about Lumax Auto. Lumax Auto, I have 40 shares at 960. The question is, can I hold for next 3 to 6 months, and can I also expect a 25% upside target on this? What exactly would you be expecting on this one? Okay, on Lumax Auto Tech, 1007 is the current level. You bought it at 960, which means you are in profits. So first of all, good to hear that you are in profits. Next 6 months, can this stock give a 25% upside?
Well, Sakshi, very good run up we have already seen in this particular stock. Almost for 7 consecutive weeks, we have seen a momentum in this particular counter, all the way from the levels of 500 to 1008 right now. So stock has doubled in last 7 weeks. So after such sharp run up in a very quick time, we usually see some bit of retracement and profit taking at the high levels. Because that's the pattern we have seen in majority of these stocks. So quite possible that we may see some bit of profit taking at the high levels, but given the kind of time horizon of 3 to 6 months, yes, the stock still has a potential to deliver another 15 to 20% kind of upside. So stay put with the long position, keep a trading stop loss at 950. If it breaks below 950, then the high possibility of further decline towards 900 as well. But 950 as of now should be the stop loss. If bought it purely from a trading perspective, I think this is a good time to book profit. But given the kind of time horizon for 3 to 6 months, one can stay put with a trailing stop loss at 950. upside can be seen near about 1100 to 1150.
Okay, got that. I hope this has also helped you out in understanding clearly what exactly should your strategy be. Next, we have a question. We don't have your name, but the question is on TIIL. And the question is it the right time to buy this stock for the short term? TIIL expands to Technocraft Industries India Limited. The stock is trading at 2008.98 at the current levels. The stock has been sideways and negative in the last 1 month or last 6 months. If you see, last year to date also 5% of a move, last 1 year also 3.5%, so pretty sideways kind of a momentum. But over a long term, the stock has performed very well, especially after 2022. You actually saw the stock rally from 735 levels to all the way up to 3800 levels as well. Then it cooled off and it's now started to pick up some pace. So let's find out whether it is the right time to look at taking a fresh entry. Nilesh.
So this particular stock has a very less volume, you can say liquid counter. Volumes are very dry in this particular stock, and we have also seen consolidation, as you have rightly pointed out, Sakshi. This stock has been trading sideways in last 1 year. After hitting highs near about 3,800, we have seen a correction till the levels of almost 2,050, and from low levels we are again witnessing a sort of a rebound. So given this kind of setup, we can expect a gradual up move to continue towards the levels of 3,500 to 3,800 on the upside, but that will take some more time from here. As of now, it is still looking more sort of a sideways now. At 3,200, it has formed a double top pattern that needs to be taken off for further momentum to continue towards 3,600 to 3,800. Support is placed at 2,650. That should be the stop loss for the long position. I won't advise taking any fresh entry at current level because the structure is still more sort of a consolidation. So a clear trend cannot be seen in this particular stock. So it's an avoid. But if bought it from a position perspective, then one can stay put.
Okay, got that. I hope this has clearly given you a strategy which you've noted down and you will follow. Next, we have a question from our YouTube again. One of our viewers is Sai Kiran, and Sai wants to know on Power Grid if you could share a forecast on this stock. Okay, for sure. Last 1 month, the stock has dipped about 4%. Last 6 months also, there's been a 14% of a drop. And in the last 1 year, again, a sideways momentum here. But the stock before that had been in an uptrend. We have also seen levels of about 350 and beyond that. And after that, there has been some cool off because, of course, we saw an 8 months of a consolidative period in the markets also. Power Grid for you, how are you looking at this one right now?
See, power space in last few trading session, we have seen some bit of a decline. Tata Power, Power Grid, and also energy stocks have witnessed some bit of selling pressure. As far as Power Grid is concerned, purely from a short-term perspective, structure still looks weak, sideways to weak, I would say. It has a very good support near about 276. So first of all, 276 should be the stop loss for the long position. And if bought it from a positional perspective, then it is looking good because we can expect a gradual up move towards 320 to 340 going forward. Purely from a trading perspective, there could be possibility of some more selling pressure to continue. But this stock is looking very good purely from positional perspective as mentioned, and a gradual up move can be seen towards 300 to 320.
Okay, fair point. I hope this has also helped you understand your strategy for yourself on the stock. Taking the next one, this one is from our WhatsApp again that we are getting from some viewers. First is Momita from Kolkata. She says, good afternoon, Sakshi, good afternoon to you as well, Momita. She holds Jindal Saw 520 shares at 253 odd levels. Okay, and the question is as far as should I average the stock since I am at a loss, or wait for the stock to be profitable in the near term? That's the question that she has. She bought at 253. The current levels are 235. What would you advise here, Nilesh?
See, first of all, this particular stock is constantly facing resistance at its 200-day exponential moving average that is currently placed at 260. So looks difficult to break 260 levels on immediate basis from a short-term perspective. But looks like it has a potential to witness some bit of a pullback towards 255 or 257 as well. So not too far from the buying price. I would suggest to don't average in this particular stock as of now. Wait for your price to come and exit. And if it breaks above 260, then there are high possibility of a follow-up move towards 300 as well. A breakout is awaited. Wait for that breakout to come. Then one can expect a strong move towards 280 to 300. But as of now, look sideways. Keep a trailing stop loss at 230. With a stop loss at 230, one can stay put for a move towards 255 to 260.
Okay, got that. Taking the next one then, again from our WhatsApp we have this. This is GS Arun from Hyderabad, and he says, "Hi Sakshi, good afternoon. Good afternoon to you as well, Mr. Arun." He says, "Hope you're doing well. I'm very well, and I hope the same for you too." The question is, kindly check on SEPC. Okay, we'll definitely check on this one, and in the meanwhile just read up your question as well. The question is that, can I invest in this stock at the current rates? It's a penny stock, SEPC Limited, just about 13 rupees 37 paisa, and last 1 month has already seen a 7% decline. Look at the last 6 months, it's dropped 40% further, and the stock has actually most of the accounts in the last 1 year has been on a downtrend. Let's try and address this for our wider audience also. It's important. Now sometimes what happens, Nilesh, is that retail investors, we always get tempted to buy smaller ticket price stocks because we think, because we have a limited amounts of funds available with us, and in that if we can buy quantity, maybe the price could actually be much higher if the returns are positive, and we can end up getting better returns. That's the philosophy generally that retail investors look at. Now here I think a case of last 6 months, 1 year, a 40% drop that has come in is tempting the retail investors even further. That since the stock has already come down about 40-50%, is there a chance that you get it at cheaper levels and probably make much higher returns? But is that what really plays out, or what are the things that one has to keep in mind? What would you advise?
So Sakshi, first of all, if you can just pull up this particular stocks chart of last 15-16 years, you can see in 2010 the stock was trading at somewhere around 270 levels, and
Wow.
from those levels we have seen a sharp decline, and it went below 2 rupees during COVID. And since then we have also seen a rebound, I would say, in this particular stock. A gradual up move was seen. The stock managed to hit the levels of 30 as well. Now it is available at 13 rupees. So a lot of volatility we have seen. A lot of corrections have also seen in this particular stock. Now it is very difficult to trade in this particular stock. First of all, it's a penny stock, and it is very difficult to take the view as well. There may not be any fundamental in this particular company which will give you that kind of a confidence that you should buy at this level. Another reason, the stock recently have also witnessed a lot of breakdowns on technical fronts as well. So first of all, it's an avoid. Avoid at current level. Avoid trading in this particular stock because this is high risk trade that you should not take. Number two, if already bought it, then one can keep a stop loss at 12 rupees, because with a very limited risk one can play these kind of high risky bet. So keep a stop loss at 12 rupees, and if at all you see any pullback towards 15-16, that can be a good point where you can exit. We are not recommending buying this stock even at current level or neither on declines, so it's an avoid.
Okay, got that. I hope this has really helped you out, Mr. Arun, to really identify whether you are actually going after the right stocks or not, or are you risking your hard-earned money there. So keep in mind all of these factors and only then go for stock selection in case you're having difficulty in choosing the right stocks for yourself. And if you really want to only look at the stocks that are slightly on a lower price ticket item, we'll try and help you out. Nilesh, can I request you to give us a small price ticket stock that one can look at? Maybe not as small, but maybe about 100 to 100 rupees, which one can look at, which has sound fundamentals and technically is also very strong. Any one or two stocks that you could pick out?
Right. So within banking space, if you see IDFC First Bank, which is trading at 70 rupees, right? It's in a two-digit stock. We have also seen a correction in this particular counter all the way from 100 rupees to 55, 50 rupees. Now the stock has once again picked up the momentum. It has a very good fundamental, provided if you are ready to hold it for more than 1 year. It's a good bet one can initiate in the portfolio, keeping a stop loss below 64. Any dip towards 68, 69 can be used as a buying opportunity. The stock has a potential to test 80 or maybe 85 levels on the upside from a short to medium term. And from a positional perspective, it has a potential to test 95 to 100 as well. So IDFC First Bank will be the first bet within the two digit. And apart from that, GMR at Airport. This is another stock where we have seen good decent consolidation. As of now, it is available at 82 rupees. It has a very strong support somewhere around 72. So with the stop loss below 72, if you see any dip towards 78, 77, that can be used as a buying opportunity for a price target of 90 to 95 from a short to medium term perspective.
Okay, got that. I hope this has also helped you out, Mr. Arun. Maybe you could look at these stocks instead. Again, less than 100 rupees is what you're getting these stocks at, but they do have some promise. The experts have studied this better, and they do believe that, here is where your money will be protected and you have better chances to make money and returns as well on the stock. So please look at that aspect. We'll take some other questions again. There are many others that are coming in on our YouTube, and some of them are coming on our WhatsApp as well. We'll take this from our WhatsApp first. This is Shiva from Nagaram in Andhra Pradesh. And the question is on Hoodco, bought at 279.2 levels. The question is, can I hold or can I exit? Now, when the PSU stocks were in full bloom, they were the theme that had to be, looked at on an everyday basis. That's when some of the investors have put their money in Hoodco, because it was discussed almost every day, everywhere. 279 is the purchase price. Sitting on losses, what should be the ideal strategy here?
Well, last year we saw a euphoric move in this particular stock. It went all the way up to 340 levels, and soon after that, from the month of July, we have started witnessing a decline. This correction has begun in last almost 1 year now. So, more sort of a consolidation, I would say, in this counter we have witnessed. It has faced a constant resistance at 255 to 260 zone. Good part is that it has formed a very good base near about 160 to 180. So very strong support in this zone can be seen. So if provided one can hold for, let's say, 8 to 12 months kind of time horizon, it's a good bet. Keep a trailing stop loss at 210 and stay put in this particular stock. It has a potential to test 250, 260 levels from a short to medium term perspective.
Okay, got that. I hope this has helped you out. Taking the next one, this is Shanmuka from Hyderabad. Shanmuka wants to know about Geofinance and also wants to know about IRCTC. Wants to enter afresh and wants to know for 1 year perspective which one is better and how should be the strategy be. Geofinance or IRCTC, 1 year time frame.
With a time horizon of 1 year, I think Geofinance holds a better structure out of these two. And we have seen good rebound. The stock has formed a big rounding bottom formation as well on the daily time frame chart. It is trading well above its 200-day exponential moving average as well. So as of now, the stock is forming a hat up and bottom formation. So looks positive for 340, 350 kind of levels on the upside with a stop loss below 265. Geofinance can be accumulated, and positionally as well this stock looks positive. Now coming to IRCTC, see, this has been one of the underperformer. Even when we saw a good run up in railway counter, railway space, this stock was a laggard. It did not join the rally. Given the kind of structure we are witnessing, it is looking sideways to weak, I would say, and not looking that attractive unless and until it breaks 850 levels on the upside. So as of now, it's an avoid.
As of now, it's an avoid. I hope this has helped you out in both the stocks that you've asked, strategy and how should you be really looking at both these opportunities. We have some questions coming in on YouTube as well, so we'll take some questions from there too. We'll take the first one. This one is from Govind Bhatia. He is joining in from Dubai and he wants to know about Tata Technologies. He has this stock in his portfolio at 760, can add more for the long term as well. But is it advisable is what he wants to know. Tata Tech is a tricky one. We have actually seen it probably not show any kind of an enthusiasm or promise to investors of IPO or from the time it got listed. It's been just lying there with no amount of any clear direction on the upside that it has shown. 740 currently. What would you advise?
Absolutely, Sakshi. So this particular stock has been a laggard post listing since listing, and constantly it was going down. But recently we have seen a good base formation in this particular stock. Stock has found support near about 600 levels, and it has given a good breakout from a short-term time frame chart. Thus, inverse HNS breakout can also be seen at the levels of 700. So the short to medium term structure has turned positive. Purely from a short to medium term perspective, we can expect a move towards 800 to 850, but it's not advisable to do averaging at current level because we may see some profit taking to continue at 700 levels as well. So better avoid taking any aggressive bets. If already bought it, then keep a trailing stop loss below 700, and if at all it reaches to the levels of 800 to 830, that can be a level where one should exit from the long position, because the major structure is not looking that attractive, although the short term structure is indicating some bit of follow up move to continue.
Okay, got that. I hope this has also helped you out. We'll take just a couple of questions more with Nilesh before we let him go. This one is from Mr. Sagar. He says, "Hi Sakshi, I want to invest 1 lakh rupees in the current market and I'm already holding Tata Motors, Bajaj Housing Finance and Jio Finance in my portfolio. Any other stocks that you could suggest?" So one he has from the auto space, Tata Motors. From the NBFC space, he has both Jio as well as Bajaj Housing. Any other stock that you could probably, or stocks that you could advise him where he can invest, and also help him understand whether putting 1 lakh rupees in the current market together will be a good idea or should he stagger?
See, it's always advisable to buy in a staggered manner. It's not advisable to put all the amount at one go. But given the kind of horizon that he's having, it's a good time. Yes, of course, any time in the market is a good time as long as you have a time horizon of a little longer term. So, out of all these three stocks that is holding, Geo Finance we have already discussed, Auto is already holding, although the short-term structure out there is not looking that attractive, but yes, one can hold from a positional perspective. Now, fresh entry can be taken in the IT pack. The markets, although are very, very volatile, we have seen IT stocks have done fairly well in the recent time. We have seen a good breakout as well in the Nifty IT pack as a whole. So within that space, Coforge is looking positive. Tech Mahindra is another stock that is also looking positive on the chart. So watch out for IT space, TechChem, Coforge. Any one of them can be bought for next 6 to 8 months kind of time horizon. So IT will be first preferred bet. Apart from that, pharma is another sector. So the focus is shifting towards defensive. IT, pharma, these are the sectors which are giving more comfort as of now in this kind of volatile market. Within pharma packs, Cipla, Glenmark Pharma, Divi's Lab, these are few names that are looking positive on the chart. So any one of these can be added from a short to medium term perspective.
Okay, got that. Hopefully this has answered your question and all the viewers also. The themes that Nilesh has pointed out, IT, pharma for the next 6 months, the stocks that he has highlighted, I hope you've noted them down. If you're a medium term investor, 6 months horizon, then definitely that's something that you could be looking at. All right, Nilesh, we will thank you then on that note for being with us on this special edition and helping us and all our viewers get their queries solved, as far as the stocks are concerned, and of course sharing an outlook on the markets as well. We'll see you soon. Thank you so much for being with us on this edition of Daily Calls. All right,
Thank you, sir.
viewers, what we'll do is we'll quickly look at the markets.